What is going on, everybody? Today we are going to be going over some trades that I may have taken, I may not have taken. Okay, I'm not gonna lie to you, I've been getting absolutely cooked in these markets, and it is completely on me. It's just my fault. The market has been moving pretty well, and there's been a lot of very good trades. I have just not been executing on them. So if you saw my video yesterday, you would see I went over a lot of great trades you could have taken, and I didn't take any of them. So today is going to be pretty much the exact same thing. I did take a trade today. I will go over the trade I took and where I got cooked. And if you guys want to give me some input, I would appreciate that. But for now, I think I'm just going to stop trying to take that type of trade. So let's cover the very first trade. I only have two on here right now, but I will let you in on the others. It was like in here, I took a short and got stopped out. But we'll get to it. We'll get to it, okay? So what I want to start with here is, I don't know, I have a couple things on the chart. I got this pink line here, this pink line here. These are not relevant. All that they are is for me. They're just before my points of interest because I have this TR pocket up here, TR pocket down here. So I just have these lines on my chart for now with alerts set so I can see before it happens, right? But don't pay attention to those. They're not actually relevant on your chart. So let's see here. The very first trade today was this short right here. Now, the reason this was a decent short is because you can see all morning we opened up the day back here, right? This is what this orange line is, daily open. And we pretty much just dumped off that. We had a nice reaction to the downside. We put in a low right here, got a reaction to the upside, came up. Then we retested daily open and we rejected off of it. So we've already sold off, we retested daily open, and we rejected. So from that rejection, on this rejection right here, you know, it's a nice strong rejection. So if we go on the hourly time frame here, I do believe, yeah, it was this red candle. So you can see we have all these nice green bullish candles up. We get one big rejection off of this fair value gap back here, plus just sweeping this high right here, and also tapping into the daily open. So we had a ton of things that we rejected from, a very clean, not nice long wick. So we pulled that rejection block right there, find the midpoint of the wick. Now, as you go down into the 1 minute time frame, I know there's a lot of stuff on my chart, but pay attention to this big blue box here. If you can look at the midpoint, you can see that's like right in here where our entry is. So we enter on that with just a 20-point stop loss. Now that rejection block was right here, just a few points below the daily open. So we enter on the rejection block with our stop loss 20 points above, targeting these recent lows. Now that played out perfectly, very quickly as well. We got that nice waterfall downwards through daily open. Definitely would have been taking partials somewhere in here as well, or at least moving your stop loss up to break even, full profit down here. So that trade played out very well. Then I missed this. I just wasn't on the chart yet. Forgive me, I have a cough drop in. But this was right off market open. I just hadn't quite gotten on my charts and everything ready to take a trade. Wasn't logged into my accounts, so I missed this trade. This is definitely a trade I would want to be taking because rejection blocks aligned with key opens are so crucial. Now, so I missed that, totally fine. But then we had news at 8:45, I do believe, right here. PMI, we already had news this morning, so that's what we had this morning. Then we had news at 8:45. So after that trade pretty much played out, right here, we had news. Boom, 8:45, news comes out. We come up and we re-sweep the previous week low. Like we retap it, we sweep out this high that we had already put in whenever we had retested daily open the first time. So me personally, I was low-key a little bit bearish because or honestly, I didn't really know where price wanted to go here because I would have liked to see price come down to like this daily fair value gap. We also, yeah, I don't know, this low right here just looks pretty good to me, but we never really reacted off of anything over here. So I didn't see a reason that this was a great low. I mean, not that it's a bad low, but I just don't know why this would be low. So I was low-key still thinking we were bearish. But, you know, we definitely could be bullish as well. I would like to see these equal highs. We have like 16 equal highs up here that I would like to see us. But for now, I mean, this is on the high time frame. So for now, here we are down here. So, you know, just, I don't know. We open up the week, we manipulate higher, and then we sell off. So we're pretty bearish. I mean, we've had all this down move here. We've already, I believe, yeah, we already have now rebalanced 50% of that price leg, and at the time we had already done that as well once we retested the daily open. So you know, a lot of reason that we could continue to the downside. We don't have to keep moving up. But here I did hop on the live stream in the Discord that I'm in, and one of the students was live today because the mentor was gone, and he was kind of saying he was super bullish, blah blah blah. He thinks we're bullish, like he was looking to market enter all the way up here, and that just kind of clouded, you know, what I was doing. So I was literally looking for a retest at daily open to take longs, but I didn't do that. So here I just am paralyzed with low-key analysis paralysis because I'm watching the stream. I'm trying to think like, okay, like we've had a lot of sell-off overnight, and then we just swept the lows again. Now we're getting a nice reaction to the upside. We just had some news come out. We just flipped daily open. You know, are we moving to the upside now, or are we not? You know, so that's kind of where I was getting at. I was getting just kind of cooked. So I didn't do anything right here because this is where I was looking for a long, and then we go below it, close below. I was like, all right, longs do not look good here. Then we get this nice push higher, and I was like, damn, this actually looks good for shorts, right? Because we swapped out this high, and we're breaking back down below with volume below the daily open, and low-key, I just wanted to short right here, but I did not do that. Instead, I waited, and I entered on the retested daily open, and pretty much just got ran through because I had a 20-point stop loss. My stop was right here, like 0.25 lower, but whatever. And yeah, I literally got stopped out same candle or next candle. It was ass. And then what do? We literally dumped back through the level, and then if I would have re-entered on the retest, I would have been totally chilling and hit pretty much full take profit here, as you can see. But I didn't do that, and maybe I should have. And this is where I'm saying maybe I messed up, because it's just super difficult, because you see we get this nice close below here, and arguably 3 down candles, a decent volume through. You enter on the retest, you get stopped out. Potentially you've been stopped out once now. Then we pretty much do the same thing. We sweep that high, we get huge, I mean, there's 3 big decent sized candles, no wicks, right? Just falling down to the downside. That's good volume. So that looks like, you know, a short again. So you enter on the retest, boom, you're stopped out twice now. You've been stopped out twice on the exact same trade. Are you really going to enter on the third one? Because now it's like, did you even have clear direction? I don't know, because you're just playing the daily open here. You know, we don't have too much. It's not too clear. So I guess since it's not too clear, this is why you should just be staying out of this. Maybe you take one loss and then hop out. I don't know. But again, it's just so demotivating whenever I see other people in the Discord not take these first 2 trades, and I don't see why they didn't take it. But then they do enter on this leg here, and they end up hitting take profit. It's just so tilting. So I don't know how to avoid that other than just kind of avoiding the flip of these plays unless you have a strong draw on liquidity. So for example, I think it would have totally been fine if, like, let's say that this low here went down a little bit lower. So it's like this, and we have equal lows. Okay, so if we had equal lows right here, then this would be a strong draw. So once we actually closed here, I'd be happy to enter, and it would probably play out, right? Or right here, same thing. But since we didn't have a strong draw down here, there's no clear draw that we have to just, boom, zoom downwards, right? So I think, in moving forward, I should only be entering on the flip of these levels if I have a strong draw. Otherwise, I'm not trading the daily open like that, because holy shit, it's so ass. It's like a gamble, bro. But anyway, that's those trades right there, okay? And then moving on to the final trade, right? So you could have shorted in here, and then finally you catch a short. So you may have taken one win here, one loss, and then finally another win here. And then the last trade, which I don't know, may have been stopped out break even here as we've been on this video, or you would have taken some partials. But this trade entry here is, we had this nice sell-off down here finally, and we get a nice closure below this low right here. As you can see, obviously on a higher time frame, it's going to show that we're sweeping this level, but here we've closed below it. And so now we've closed back below previous day low. We broke structure here to the downside on the 1 minute. We have this point of control as well, which lines up with previous day low. So as we back test and retest this previous day low, simply enter with a 20-point stop loss targeting. Boom. This low right here, we also have this CR pocket. We're looking for a reversal around here, and we even have 1 hour rejection block. But I would have just taken full profit right here. Maybe took some partials in here somewhere, maybe it's like fair value gap, but I didn't end up taking that trade. I was off the charts after I got sauced up in this thing right here. So, but yeah, as you can see, it is playing out again right now. But But yeah, moving forward, okay, so I've been getting absolutely demolished in my trading, even though all these trades are very clean, easy to see, simple, all that shit, right? So what do I do here, okay? My plan, I think, what I'm going to try to do is, number one, so if you guys ever find yourself in a situation like me, right, because this is pretty easy to be in, maybe you guys want to work through it kind of like I'm doing here, but I'm trying to find the damn text, bro. How do I, here we go. All right. So number one, and because also my mentor is Angus. If you guys don't know who Angus is, figure it out. All right. But my mentor is Angus. So I need to make sure I am thinking like Angus on YouTube. Because, okay, so whenever in Angus's YouTube videos, for example, whenever he's talking about the daily open strategy, he tells you use 10 to 30 point stop loss. 20 to 30 point stop loss. But whenever he takes the trade on Discord, it's only 10 points. So you're looking at him taking a 10 point stop, but he says take 20, and you're still kind of learning it. You're still kind of getting into it kind of thing. You still need to be doing 20 point stops. Like, you're getting cooked if you try to tighten it too much. And he even says in his videos, he tightens it just because, you know, once you get like that, you can kind of do that. And once you've taken a lot of trades, you can start tightening your stop losses. But generally 20 to 30 points on certain trades is going to be good. Like, different stop losses, different things. So if you're taking golden pocket, 786, right? So that's one thing. What I mean whenever I say thinking like Angus on YouTube is focusing on that instead of trying to narrow your stop loss like 10 points or something, right? And then secondly, like whenever we're talking about like the daily open strategy, for example, and all the examples he's showing, it's not this. Like, this is not a deviation. So if this is previous day low and we're coming down and we're sweeping it, right? We don't want to see a deviation like chopping here. Maybe like we come down here. Let me actually get the other tool. So we don't want to see like, you know, us chop in here and then us sweep and then boom. That's not our entry. And also, like, that's not our entry either, right? But what is our entry? This. You see? So that is the entry. Oh, damn. I've been on full screen this whole time. I'm low-key tripping. You guys may not have even been able to see all this. Let me actually fix that. So my apologies if... Damn, bro. If I was showing stuff that y'all couldn't see. But anyway, here we are. That should help. But basically, so here, this is what... So... Like, you want to see strong volume. And so after I see the sweep right here, I'm looking for strong volume, right? And so as we can see here, like, for example, we sweep above daily open. And like this right here, to me, looks like strong volume, right? It's 3 decent sized candles to the downside. But it's not distance away from previous day low. You know what I mean? So like here, all of these could have been good volume. It could have been like we went from here to here quickly. But the thing is, we don't get a far move off of this off the previous day low, which is what we're looking for. It's not just strong volume, it's distance off of previous day low, is what I think. Because looking back at all these examples, whenever it is strong volume but not strong distance, it does not play out the same. Now, granted, it does sometimes. Obviously, you're going to get it where it literally, we get a sweep like this, and then our break above is that, retest, boom, and it just sends like that, right? But personally, I would want to wait for this retest here instead of this one. This is clean, it looks great whenever it happens, but too often than not, it does not play out. So that's also what I mean whenever I say think like Angus on YouTube, because on those, he's more so like whenever he's explaining it and talking about a break and retest, he shows it's going up higher on the retest instead of just this little small volume. It's this thing here. So it's both of those. 1, not trying to tighten your stop loss too much, and 2, making sure you understand the volume on deviations, things like that, and just going, like, actually listening to it. So another example of thinking like Angus on YouTube is if we have a golden pocket, right? You don't want to just take, for example, like I know people we're taking this, oops, not that, my bad. We're taking this golden pocket right here. And now, while this may have played out, it's not a good golden pocket to take. And the reason why is because we never broke structure. So in Angus's video, he literally explains, right? We get this sweep, we want to wait for a break of structure, which may not be for up here or till here. And once we break that structure, that's confirmation we're going to continue on this trend, which is then when you would want to use that golden pocket. So just another example of a time you want to be thinking like Angus. So think like Angus on YouTube. That can mean not tightening stops too much. It can mean understanding correct deviations. It can mean waiting for correct confluence. You know, all these sort of things. Or waiting for correct confluences, you know, or confirmation. Boom. So, also, another thing is where slash what are we coming from? This is important as well, because here, for example, if we just like here, we swept out this low and we came up here. So on this flip, you're not really looking for longs as much because we just swept out this liquidity here. It's not like we swept out, you know, I don't know, something more important like this low here. If we swept out this low and then went up, it's like, okay, yeah, sure. Not just some 1 minute internal low, right? So where do we come from? Where do we go? Type shit. Those things are pretty important here. Okay. And then for the next thing that I wanted to add on this list, which I think will help me dramatically in terms of avoiding these trades here, is only taking, or no, we need like, but we have to have a clear draw on liquidity. So key open entries must, here, let me actually just, I don't know how I want to say this yet. So key opens need confirmation. And this comes by either a strong draw on liquidity, or it comes by like other confluence, like 786, or like, you know, GP slash rejection block, FVG even, I guess, you know, shit like that, right? So yeah, so this is what I'm saying here. So basically, for these key opens, they do need confirmation. So like I said earlier, you don't really want to be shorting this here unless, you know, there's a rejection block on it and we have a really strong draw on liquidity. So then I think it's worth doing it. So use that how you will. I just want to kind of go over some of this so you guys can kind of understand where I'm going wrong, and also to help you guys see these trades, because low key these are gas trades. It's just I'm just making a couple mistakes here, like trying to short right here, too tight of a stop loss, like etc. But honestly though, if I took every single one of these trades today, I would be up right here. Let's calculate. All right, so if you took this trade, you're up 6R, and we're just gonna say we full TP'd, okay? No partials. So 6R, boom, and then you lose 1, 2 times here. So now you're down to 4R. Then you win this trade here, which would have been, let's see, flip a daily open, retest, 20-point stop. Boom. Take profit here would have been a 1 to 7. So let's see. So 6. We win 6 on our first trade, then we lose. So now we're down to 4. Then we win 7. So we're up to 11R on the day. Okay. Then come down, take this trade, and we get stopped out break even because it doesn't hit our full take profit. So we're still up 11R. So we'd be up 11R on the day if you took every single trade risking 1% and close at full TP. Now, that's what I'm saying. So all I had to do is take every single one of these trades I saw today with risking 1%, taking profit at my full target, and I would have been up 11R. Okay? But instead, what I did is I didn't take this first trade just because I wasn't ready. Then I took this second trade. I'm down 1R. And then I didn't take the second one. And then I didn't take the third. So I'm just down 1R. And then I didn't take this. So then I'm still just down 1R. Instead of, you know, up 6. And then down up 5. And then up 4. And then finally back up, 11, and then, whatever. So it's like, this is why you have to continue. You have to be consistent. You have to follow your rules. You have to just keep trading. If you can't be selective. You can't be like, okay, I want to take this. I don't want to take this. I don't. You have to just boom, set up, take, risk 1%, risk 1%, risk 1%, blah, blah, blah. And so I think it's very difficult because in trading, it can be super hard to discern exactly which trade is worth taking on which account. So for example, if you're trying to pass a funded account, a lot of times you're going to be over risking. So what that means is, on this first trade right here, you might have risked $500, which is like going to pass you the account. If it passes, if it loses, you're cooked, right? And so that's one way of trading. And then once you actually are funded, you don't want to be trading like that. So you only want to be risking like 1% per trade or whatever it is. Like probably like if you're on a 50K, you want to be risking like $75 or something, so you can take a lot of trades, right? So then it's 75 on this one, 75 on this one, 75 on this one, 75, you know what I mean? And then it works out. But if instead what you try to do is you're like, okay, I'm going to take this one on a funded, I'm going to take this one on an eval, and I'm going to take, you know what I mean? It's so difficult to go back and forth between accounts. I swear, the best thing to do is keep just trading your main accounts and, trading like normal, taking each setup, and overall, over time, it should be good, if that makes sense. But that's pretty much all for me in this video, guys. I hope you guys did get a lot of value out of it. I know it's a little bit longer than normal. Unfortunately, I wasn't able to recap my exact trades. But again, these are the entries that, one, I would have wanted to take, or two, my mentor did take. So like this one here, my mentor took. This one here, which is my own analysis, but it was a good trade as well. And then these in here were things that my mentor was signaling, kind of just saying what he was looking for. And then that was my damn, I forgot, I'm not even showing you. Let me show you the chart real quick. So the one I was saying is, this one my mentor signaled, this one was my own, and then these three in here were all my mentor had said, be looking for this, but it was my own executions on his ideas. Obviously paired with mine, but that's going to cover it for today. I hope you guys enjoyed this video. I will catch you guys in the next one, but I'm out.